Hey guys, it's Gord again with Win with Nathan with theLender. Hey, today on the playbook I'm going to talk about 5 key steps. So weird morning this morning. I went to the gym, I was working out, I was listening to someone next to me tell their workout buddy there's key steps to building muscle, all that. And of course that triggered in my brain, hey, why not talk about some key steps in financing a house? Right? Key steps that's going to make anyone not scared of the buying process of buying a house, which is going to be probably your biggest debt and biggest purchase ever. So today on Playbook, we're going to talk about the 5 key steps that I want to look at when someone comes to me and wants to buy a house. All right, so let's get started. So step number 1 is going to be you're probably going to laugh, but it's as simple as understand your credit and understand your budget. The reason for understanding your credit is simply put, credit is everything. Credit determines your interest rate, it determines your loan to value, it determines your loan types. You can get your loan products, right? There's a lot of government loans out there, USDA, THDA, different states have different loans, VA and all that stuff, that your credit does affect it. So you want to know what your credit score is. You don't want to look at Credit Karma and think that's your be all end all credit score, because it's just a rough estimate. If you want to use anything, go to my FICO and go to my mortgage score. That's a pretty accurate way of looking at your credit score. Why is it important? Because when we pull your credit score, if you're a few points away from the next tier to get saved money on an interest rate, let's see if we can bump your credit up. Or hey, you might be 5 points away from here in Tennessee qualifying for the Tennessee program for first-time home buyers. That actually helps you with closing costs or your down payment. Well, let's boost your credit up. Let's wait a month or two, whatever it takes, and get you to qualifying for that mortgage. Why is budget important? Well, you don't want to say, hey, I'm going to go buy a $400,000 house. Start looking at that, and then based on your credit, your income, we tell you you're only approved for $300,000. You're going to hate the fact that you were looking and getting your hopes up for this $400,000 house when you can only afford $300,000. So you want to know your budget up front, right? You want to know what debts can you pay off to increase your buying power. You also want to know, can any debts be removed? Maybe you only owe on them for 5 or 6 months, or heck, maybe your parents pay on them for the last 24 months and you want to remove it out of your debt ratio. You also, for investment properties, want to know, is it going to be a long-term or short-term rental? So let's talk about documentation, right? Depending on what type of loan you're buying, what kind of occupancy, determines the determines the documentation. So for a primary home, you're going to need income documentation, whether it's W-2, tax returns, 30 days pay stubs. It all depends on what type of employment you are. You're going to need your driver's license, you're going to need bank statements, you're going to need verification of employment. There's so much documentation that goes into it, but ultimately that's what we need to pre-approve you. Then if you're going to buy a second home, a vacation home, all the same documents as a primary, except we're going to need your mortgage statement on your primary house so we can make sure you're up to date and put that in your debt ratio. You're going to get asked for a letter of explanation explaining that you will stay in this home by the majority of the lenders. And then also you're going to have to fill out a document that's basically called a second home rider, which you want to make sure you follow those guidelines so you're not actually committing fraud on a vacation home. On investment properties, right? We want LLC docs, bank accounts, projected income, all your mortgage statements, all your same documentation from your primary. Now, if you go non-QM DSCR, what I want to pre-approve you is your application, your credit score, and your bank account showing your down payment. That's it to pre-approve you. But to get the true pre-approval after your contract, we want your LLC docs, we want all projected income, we want all your mortgage statements, and your bank or your 1031 documents if you are selling a property. So DSCR is the easiest to get pre-approved from. It takes me about 5 minutes. All right, so next let's talk about the next step, which is shop around for the right lender, the right terms, and the right mortgage rate. So first, how should you do this? Easiest, ask your friends and family, who do they love? Who have they used? Who have they had a good experience with? Who have they had a bad experience with? Ask your realtor who they trust and they work well with, because you're going to have a team of people, right? And if there's a miscommunication between the realtor and the lender, it can cause some serious problems. So make sure you trust, they trust each other and they both have your best interest out for you. Interview each loan officer. See what areas they're experts in, right? I know a guy who I used to work with, he's an expert in VA. I love VA loans. I did a lot of research on VA, but if I had to recommend someone besides myself to do a VA loan, I've given his name out several times. Don't know if he's closed any of them, but he is an expert in VA loans. If you want a Tennessee first-time home buyer program, I can tell you a lender to stay away from because they hate doing them. I can tell you a lender that's great at doing them. So you want to make sure that there's area of expertise your loan officer has, and not just him, but his company. Because here's the thing, when it comes to rate, all Fannie Mae government loans, they're all going to be about the same in interest rate. You're not going to see much difference in it. What really matters with rate is when it comes to non-QM, you're going to want to look at down payment requirements, you're going to want to look at credit requirements, and then you want to look at discount points and origination costs. But ultimately, when it comes to rate, everyone's going to be in the same ballpark. Have you considered working with a mortgage broker or a lender or a bank? What to consider, right? This will be someone you're going to call countless times. So is this going to be someone that's going to answer you? Is this going to be a bank where you have to call a 1-800 number? Is this a personal cell phone? Are you going to be dealing with someone assistant, where all communication goes through the assistant, but yet all of the questions are really needed by the loan officer? If you're brokering the loan, who's going to make decisions, right? If you're doing a non-QM product, bank statement loan, DSCR, and you come to a broker and they say, hey, this is it, they might not be up to date on all the latest things, because the loans, especially non-QM, are always changing, right? Because they change with the market. So you want to make sure that you know who's handling your loan and who makes decisions. When you deal with a jumbo loan, right, you got to understand most people are going to underwrite in-house, right? And then they send it off to the investor to underwrite a second time. That's why jumbos get a bad name. So you want to see what's the process, ask about the process, the turn times and all that. And then also you want to ask, does your lender, bank, or your mortgage broker look at a 50,000 foot view, or do they look at a 5,000 foot view or a 10,000 foot view, right? You want to make sure that if you're pre-approved maxed out at 400,000, you want to make sure your lender tells you that, because you don't want to go offer on a 399 knowing you have to come back at 350 and you're that close to getting the house. That's going to really make you mad. Make sure they're not overextending you. Make sure they put you in the right product for your goal and that works best for you. Does their product match your goals? If it doesn't, then change. Change loan officers, change products. It doesn't matter. And then is that loan officer watching, monitoring, updating himself on the market, not just the market, but the products, the strategy, and all that stuff? I can tell you, I talk to our owner a lot. He's always watching everything. He's always up to date in the market. You know, in the mornings, I watch stuff all the time when I'm working out at the gym. I can tell you at theLender, we are in the trenches with you in the market. We want to know before you do what the market's doing. So, get pre-approved before you start looking for the home. All right, so here's the age-old question, right? Did the egg or the chicken come first? Same thing in real estate. Pre-approval or realtor? Well, whichever one you have first, do it. If you first are looking right now and you don't have a realtor, get pre-approved first. That way you know exactly what to tell the realtor your max budget is, where you want to stay, everything. If you're talking to a realtor, before you let them show you anything or start sending you houses, figure out what you can afford, get pre-approved. If you don't have an agent yet, call a lender first. If you have an agent, call a lender right away. All right, call and interview your realtor, call and interview your loan officer. Make sure the application gets done, get the pre-approval, know where you're maxed out at. The key is to see the big picture, right? Depending on the loan type you go will change all your expenses, whether there's mortgage insurance, whether there's any type of HOA on the account, anything like that. You want to make sure you know, depending on the property, because you want to make sure you know what your budget is. Know your buying power before you go out there and get your hopes up or anything like that. So the conclusion here, don't be scared of real estate. We're here to help. And if you can't find a lender that is willing to help, move on to the next one. And if you do have a letter in hand and you're concerned, you're not sure if it's right, call us. Call us at theLender. Let us take a review. There's no cost to review. We're here to help. If we can beat it, we'll beat it, but not just that. But if you want to be in the right product, let us help you. I can tell you, one of the biggest companies here locally, I was looking and reviewing a customer's file of refinance, and the loan officer put the guy from a conventional to a VA loan. It made absolutely no sense because he had to pay that fee.